wants to invest in real estate but can't quite envision becoming a landlord, a real estate investment trust, also known as a REIT, R-E-I-T, could be a good alternative. I'm Elise Glink, and here's today's update. Owning real estate requires a tremendous amount of discipline and focus. At a minimum, it requires organization and a willingness to deal with, I hate to say it, tenants. But REITs offer a means of investing in property without the headaches. REITs are collections of income-producing properties or mortgages, and it's usually based in a certain type of real estate, right? So to qualify as a REIT, a company must be mostly invested in real estate and must pay out 90% of its taxable income annually to shareholders as dividends. Taxes are paid by shareholders on the dividends and any capital gains. Now, when evaluating a REIT, it's important to know what the underlying holdings are, what kind of income has been produced and what is going to be produced, what the REIT's history of dividends has been, what its projections are for future incomes, and how it will be to sell those shares when you're ready. Because most investors are looking for share price appreciation in addition to dividends. Now, the biggest advantage of a REIT is that you get to be a passive investor in the real estate market, right, which is good for tax purposes, and you can diversify your portfolio to spread around the risk. Instead of buying one house, right, you might be investing in a REIT that owns 10,000 real estate investments, right? So that's really spread out. Being a passive investor doesn't mean you can be a lazy investor, so don't assume that buying a REIT means you can just skip doing due diligence, sit back and drink a beer. Not all REITs are created equal. The people who run those REITs are not created equal, and there's no guarantee that your investment will be a good one. You've got to make sure you choose wisely. There are other ways of passively investing in real estate. Depending on your federal income tax situation, you can buy shares in mutual funds that invest in home builders and other real estate companies. Or you could even invest in a commodity like steel or gold that tends to track the fortunes of the housing market. You have a wide variety of choices on where to invest your money, but you have to keep a goal in mind, right? Determine the benefits that any investment would give you, and then decide which of those risks you're willing to accept. REITs definitely have risks. There are huge benefits if you get the right one. I'm Elise Glink. If you've got questions about buying real estate, you should send them to me at questions@thinklink.com or via Twitter @Glink. Thanks for watching. See you next time.